In this chapter, we will look into the term audit, its meaning, nature, scope, and benefits. We will also discuss about SA 200, inherent limitations of audit, and types of engagement, and different types of assurances, quality control, and lastly, we'll wind up with a case study. Let me give a basic overview. Suppose, say for example, you are going to be an auditor of XYZ company. Okay, this is you. Okay, you are an auditor. The shareholders of XYZ company in their annual general meeting will appoint an auditor to audit their accounts, to audit their financial statements, to audit their financial information. So this financial statement will comprises of different statements. You know these statements for sure. Balance sheet, P&L account, then cash flow statement, statement of changes in equity, and also notes. Remember, notes accompanying these financials are part of the financial statements itself. So there should be an agreement, right? It is in the form of an engagement letter, and this should be agreed between the auditor as well as the company. And this engagement letter shall encompass with responsibilities of the parties, which is XYZ company and you as an auditor, then the timeline, scope of work, fees, etc. Now, you as an auditor will be performing audit procedures on this financial statement. Audit procedures. And these audit procedures, say for example, you will observe, you will inspect, you will inquire, you will perform verification, vouching, and such kinds of audit procedures. Why do you perform audit procedure? Because you need to obtain audit evidences. And these evidences should be sufficient and appropriate. Sufficient means in terms of quantity. Appropriate means in terms of quality. So quantity wise and quality wise, you need to obtain audit evidences. And based on audit evidences obtained, you will understand that whether the company XYZ company has prepared these financial statement is true and fair, it is correct and prepared as per compliance of law, applicable law. And you will express an opinion. And this is in the form of audit report. Remember, so audit report is not the result of financial statement. You are expressing your opinion on this financial statement based on the audit evidences obtained from performing these audit procedures, right? This opinion should be independent, which means it should not be influenced by any other person. The opinion is by you yourself. It should not be influenced by the money they are giving or from the management, or say for example there is a relative of you or a friend of you. So it should not be influenced by anyone. It should be independent. It should be free of judgment. It should be objective. Okay, now you have a clear idea, I guess. So you understood that the preparation part is to be performed by the management of the entity, and the audit part is to be performed by you as an auditor. Now let's go in detail. The term audit is from a Latin word which means to hear. Because in medieval times, auditor used to hear the accounts loud. So they are hearing, right? Likewise, the term is from audire, which means to hear. As we told, this is an independent examination, and the opinion you are giving is through a report, which is the audit report, and entity. We talked about entity. That means XYZ company is the company that you're auditing. The auditing entity, which means the company you're going to audit, it need not be an company itself. It can be in any form. It can be an LLP or a proprietary concern. It can be of a non-profit organization like a charitable trust or any other organization type. Then interdisciplinary. Audit is interdisciplinary, which means even though we are going to audit based on the standards of auditing, we should know the knowledge, the subject knowledge, as well as the application level of this subjects like financial management, accounting, mathematics, statistics, economics, and all those subjects know which you will be learning in your inter and final level. So, an audit is an independent examination of financial information of any entity, whether profit oriented or not, and irrespective of its size or legal form. When such an examination is conducted with a view to expressing an opinion. So, we are conducting an examination to express an opinion, and that is in the form of an audit report. Now, what is the scope of audit? Let's discuss about that. Scope of audit. What do you mean by scope? Scope means range of something, right? Like how much it is going to cover. Regarding audit, we will be covering all that are related to the financial aspect or financial information of an entity. Similarly, the financial information, whether the entity has properly disclosed, whether they have given sufficient information and reliable information. Remember, all the transactions that has happened in that accounting period should be reflected in the balance sheet and P&L of that particular period. So that coverage should be there. That is done by the preparation is done by XYZ company. We are evaluating whether it is adequate, whether it is proper. So the selection of accounting policies or based on what framework they are going to prepare, that is done by management. We are evaluating whether they have done it correctly. That is our duty. So that is included. And we will finally express an opinion in the form of report. So FS related things are only covered in audit. Okay. Now what does not include, which means what does it exclude? As we told earlier, the preparation and presentation part of the financial statement is done by whom? Management. So whether it is included in our scope? No. It's done by management. Preparation, presentation is done by management regarding the FS. Okay. Now, authentication. Okay. Are we supposed to authenticate? When we are auditing, we have told that we will be um, checking the invoices, right? We will see whether there are underlying records, whether there is sufficient evidence to rely upon. So that is done by us. But whether that particular invoice is genuine, we are not supposed to do that. Of course, we will be of ordinary prudence. We will be checking the date in the invoice, the amount in the invoice, what is the party. Such things will be there. We will check that. But whether that is a genuine record, are we expected to do that? No. That is outside the scope of audit. We are not expected to authenticate. Competence. Competence means the skill set. Skill set as an auditor or the competence that we are having as an auditor is related to evaluation of financial statement, right? Say, for example, that XYZ company is having a building, okay, and it is presented in the balance sheet. We will be checking upon whether it is rightly valued. We will be checking upon whether the depreciation treatment is correct. Such things we will be looking into, right? Yeah, or the deed, etc. We will be checking. But are we expected to tell about the physical condition or the suitability of life of that asset? No. That is done or that is performed by engineers. And we are not expected to be competent or we are not expected to give opinion on it. Similarly, the another exclusion is investigation. Investigation. Suppose a fraud has happened in that company XYZ that we have discussed, and there will be an investigator who is going to investigate on that issue. We are not going to investigate. So that is outside the scope of audit. Investigation is not done by us. So we can narrow it down to objective of audit. Okay. So objective of audit is that to obtain reasonable assurance about whether the financial statement as a whole are free from material misstatement, whether due to fraud or error, thereby enabling to express an opinion. So we will be checking the financial statement. That is very clear, right? But can we say that 100% the management is correct? Yes, we do obtain sufficient appropriate audit evidence. We perform different procedures. That is right. But are we able to compare or are we able to analyze or understand each and every transaction in detail? An entity may be having thousands or lakhs of transactions in a particular accounting year, but we are not going to check each and everything, right? So we are only able to give a high level of assurance, which is not absolute, which means which is not 100% assurance. But we can say that there is a high probability from what we have obtained that this is true or this is correct. So we are only providing a reasonable assurance. Reasonable assurance. Okay. So what do you mean by assurance? Assurance means confidence to users. Okay. So there are different users who use our audit report, which is including the FS prepared by management, which we audit. So this is reviewed or this is used by many people and they will be taking decision. Say for example, the company that we discussed, XYZ. So that particular company, if they are going to get listed or if they are already listed, there will be shareholders, right? And there will be other people who would like to invest in that company. They will definitely go through these financials and audit report and they will take decision whether to invest or not based on our audit report, right? So they are the stakeholders. Now, similarly, there are other stakeholders or shareholders. Okay, I told about shareholders. There are other stakeholders. Stakeholders means who? Those who are interested in the company. It can be government, it can be banks or any person, right? So whoever using it, that are our users or intended users. Some intended user covers all these shareholders, stakeholders, government, companies, etc. Now, assurance. We are providing this assurance to whom? To intended users. Okay. Now, this assurance can be reasonable or it can be limited. For audit, it should be reasonable. As we told, this is a high level of assurance and it is not absolute. We can't give 100% assurance. So this is high level but not absolute or 100% assurance. But it's a reasonable assurance. Now, there are different engagements. Okay. When we have talked about audit, it is one such engagement that a client will reach to us. Okay. There are different types of engagement. And depending upon the type of engagement, the work that we are performing, the procedure or whatever we are doing differs. Similarly, the report also differs. And thereby, the assurance that we will be giving to users also differs. So for audit, we give reasonable assurance and the opinion is in the form of audit report. And there are other engagements like review engagements. In such engagements, we will only perform a pure procedure. We will only perform a pure procedure. So fewer procedure, therefore, we can only give a limited level of assurance, which means lower than reasonable. Okay, we can't give a high level of assurance. So lower than the reasonable level of assurance is limited assurance. Remember, in audit, we are performing more procedures. Okay, I haven't written here. Example is audit. Okay, for reasonable, example is audit engagements. And for limited, the example is review engagements. I hope it's clear for you. Now, assurance engagement. Okay, we will discuss in this section more about the elements of assurance engagement. As we told, assurance means those that provide confidence to users, those engagement that are supposed to give confidence to users. Audit is one kind of assurance engagement. There are different types of assurance engagement. So we are going to talk about assurance engagement in general. So this is a three-party relationship. Okay. Which means there will be a person who's preparing the subject matter, which is the responsible party. Okay, this is the responsible party. This is one of the party. In that assurance, three-party relationship. Then, for whom assurance report is prepared? That means we are going to prepare it for the intended users, right? Yes. Then, a person who provides assurance, who is giving assurance, which means it is the practitioner. Let's correspond these people in our example. Okay, I hope you remember the example that we have discussed, right? The first one, when I give you the basic idea. So XYZ company was there. We as an auditor were there. Okay. In our example, when we talked about audit as an assurance engagement, the responsible party, who was the responsible party in preparing subject matter, which means in preparing the financial statement, XYZ company. So XYZ company is the responsible party in our example. Similarly, who are the intended users? Even though the report is being used by XYZ company, there are other users. Okay, so they are termed as intended users. Say, for example, shareholders, which can be prospective shareholders or existing shareholders to invest more or not. So they will use our report. Now, similarly, maybe government may be using it. Okay, or maybe banks may be using it for giving credit facilities likewise. And there are other stakeholders as well. Okay, stakeholders. So they are termed as intended users. Who provides assurance? In audit, we provide assurance, right? So who are we? We are auditor. And we are providing assurance. Okay, I just help you with how to correspond in terms of audit. So understand that in an assurance engagement, it is a three-party relationship. There is a responsible party, there is an intended user, and there will be a practitioner in that particular engagement. Engagement means in that particular arrangement. So it's an arrangement to do something. In terms of audit, we are doing audit work, right? Now, when we have told no, the responsible party is preparing the subject matter. Now, what is the subject matter? Subject matter is the financial statement that they prepare. In terms of audit, it is FS. In terms of some other engagement, what we are going to evaluate or check into, which is prepared by the responsible party, that is the subject matter. Suitable criteria means the benchmark, right? So what is a benchmark? In preparing financial statement, the management is preparing according to an applicable financial reporting framework, which is the benchmark. This can be in the form of an accounting standard or as per Companies Act, like laws and regulations. So that particular thing on which we are going to assess or we are going to evaluate is the benchmark, which is termed as suitable criteria. Okay, so this benchmark means the AFRF, which means applicable financial reporting framework. Okay, in accounts, you will be learning about accounting standards. So this is a benchmark. Similarly, uh, Ind AS, it's also a benchmark. Now, or it can be a lower regulation, like as prepared in accordance with Companies Act. So this is also a benchmark. Then IFRS. This is also another benchmark, or say for example US GAAP. So on, there is a standard based on which this is to be prepared. The subject matter is prepared and with which the auditor is also comparing. Say the management is preparing as per this accounting standard. The auditor is evaluating the management has rightly prepared as per the accounting standard. Understood? Now, sufficient appropriate evidence. In assurance engagement, as we have told earlier, sufficient means in terms of quantity. Okay, quantity of evidence is required. Now, appropriate means in terms of quality. Okay, some evidences provide more comfort to the auditor because auditor can rely upon it. So such evidences in terms of quantity and quality the practitioner has to obtain. That is sufficient appropriate evidence. Okay, in terms of audit, this is termed as sufficient appropriate audit evidence. Now, written assurance report. What is written assurance report? For assurance engagement, the outcome is in the form of a report. Okay. For audit being another assurance engagement, the outcome is in the form of written report called the audit report. So this is basically the outcome of assurance engagement. So let's conclude. Assurance engagement means an engagement in which a practitioner expresses a conclusion designed to enhance the degree of confidence of intended users other than the responsible party about the outcome of the evaluation or measurement of a subject matter against criteria. Now, I have to point you one more thing. That's the difference between the practitioner and auditor. Say for assurance engagement in the three-party relationship, we told one of the party is practitioner, right? And in terms of audit, we have corresponded the practitioner with auditor, right? What is the difference between these two terms? Practitioner and auditor both are providing assurance, right? Both are dealing with the assurance engagement. But this term practitioner is wider in scope. So the scope is wider for which term? Practitioner. The scope is wider for practitioner. So based on scope, this is wider and this is comparatively narrower, right? Now, what is the auditor doing? Auditor is evaluating historical financial information. Why historical? Historical financial information. Okay, why it is historical? That is because the balance sheet or the P&L and all the FS statement, what does it imply? That it has already occurred. Say take purchase, sales. Such purchase and sale has already happened, right? And we are evaluating that has already happened, the event that has already occurred. But in terms of practitioner, he may be doing an assurance report, say for example, for a prospective financial information, which means it is about to happen. So this is not only covering the historical financial information, but also other than historical financial information. That is why the term practitioner is wider in scope. Okay, I do repeat once again for you. Auditor means he is evaluating those things that has already happened in the financial statement, the assets, liability, or the cash flows. Everything has already occurred and he is evaluating what has already occurred, right? So that is a historical financial information. But practitioner is someone who not only covers this. We have told no, there is assurance engagement like review and audit. Similarly, there is other assurance engagements. One such assurance engagement is to evaluate prospective financial information. So that is done by practitioner. So the term practitioner is wider in scope. Now let's talk about different standards, okay, which will help you to understand the term practitioner even better. Now, why are we having standards? We have told that there are different standards or on which we have to rely upon while we are auditing. So, why do we have that? Of course, we are having a guidance, right? The auditor is having a guidance on how to evaluate. Say, for example, there is a standard SA 501 uh, where inventories is covered, litigations and claims are covered. So the auditor gets a guidance on what to audit, what are the procedure or what is the aim. So standards provide this guidance. Now, quality of financial reporting. Say, for example, accounting standards. Okay, such standards help the management in preparation of FS. Similarly, for the quality of audit, to improve the quality of audit, the auditor has to comply with standards. So, quality improvement in audit is because there is standards on auditing. Similarly, it helps in uniformity and comparison. So, there are different benefits. That's why ICAI Council has issued standards. Depending upon the engagements, there are different standards. And each such standard has objective, which means the aim that we have to achieve or what is the compliance that we intend to. Now, depending upon the type of engagement, we have different standards. Okay, type of engagement, which means client reaches out to us not only for audit, but they reach out to us for getting assurance reports or maybe review or maybe a related service engagement. They may ask us to help to compile information or to give assurance on prospective financial information. So for different types of engagement, the point is that there are different standards. Okay. And what kind of or what level of assurance are we giving? That is to be discussed. And also on what? On what it is given. First, audit. As we discussed earlier, what kind of assurance are auditors giving? Reasonable, right? Reasonable level of assurance. And this is on historical financial information. Historical financial information, right? Yes. And the standards are termed as SAs. Okay, there are different standards. It starts from SA 200 and up to 8999. These are the series. But remember, not for each and every one. Say, for example, 201, 202. Like number wise, there is no standard. There are gaps in between, maybe filled later by the council. Now, let's talk of another type of engagement, which is the review engagement. Okay, for review, we have SRE. Remember, this is not SA. For review, it is SRE, Standards on Review Engagement. For the time being, 2400 SRE and 2410 are for the time being given. And the level of assurance is only limited. Even though we are performing the procedures on the historical financial information itself, but the level of assurance that we are able to give is limited because only fewer procedures are being done for review. That's why the level of assurance is limited. Now there are other assurance engagement. Other assurance engagement means other than audit and other than review, there are other assurance engagement. SAEs, Standards on Assurance Engagement, 3400, 3402 and 3420 are the standards for the time being. So the level of assurance can be reasonable or it can be limited. But remember, this is not on historical. Okay. This is other than the historical financial information. Now there are other type of engagement, another type, related service. Related service. For that, the standards are SRS, Standards on Related Service, 4400 and SRS 4410. And do we give any assurance? Remember, for related service engagement, there is no assurance. Okay, no assurance is being given. It's done on financial information itself, but there are no assurance engagement. Let me give an example for you. Say, for example, there may be an agreed upon procedure. Okay, this is agreed between the management and you. And you are only performing that procedure and giving a report. So you won't be giving any assurance on it. You are just performing, agreeing between you two. You will be performing and giving a report, and you are not giving any assurance as such. Assurance as such. Now, these are the type of engagements. Remember, these are the type of engagement for you as an auditor. Maybe you are practicing in a firm. Okay. At a firm level, depending upon the engagement, you have to comply. But overall, there is something termed as SQC, which means Standards on Quality Control, which is at the firm level. At the firm level meaning, say for example, this is the firm. Okay. You have set up a firm, CARB, LLP. Okay. Remember, a firm, CA firm can't be in a company form. It can be in an LLP form or a firm form, but not in a company form. So this is CARB LLP. You may be getting different types of engagement like audit, review, or related service or other assurance service. Different types of engagement you may be getting. And for each engagement, you have different standards, right? And you have to achieve the objective of different standards based upon the engagement that you are getting. But at the firm level, which means for overall, there is a standard on quality control, which means the firm at its firm level shall have policies and procedures in order to comply with the legal requirements, professional requirements, or ethical requirements. So such standard is called the Standards on Quality Control. As of now, there is SQC 1. So this is not any standard to give assurance, but rather than it is at a firm level to set up policies and procedures so that the particular accounting firm or not accounting firm, audit firm has a system of quality control in it. So system of quality control. What does this aim at? The standard SQC1 aim at system of quality control at the firm level, which means at all the engagement level, this SQC1 has to be complied. For example, for different engagements, the auditor has to document whatever they have performed, what is the output, any variations, such things they have to document. So that particular practice or policy should be there at the firm level, which means the firm's policies and practice should encompass this documentation as part of their policy and procedure. I'm just saying it as an example. Okay, there are different elements in SQC1 which we will deal later. So SRE are the review standards, right? Review. For review, how are the procedures? Are we doing procedures like in audit? No, only fewer procedures or limited procedures. Limited procedures. So when a client approaches you for a review engagement, you are performing only limited procedure. And the level of assurance shall also be limited. So limited procedure, limited level of assurance. These are the two standards as of now. This SRE 2400 is a revised standard, which means the council has revised it. There is an older version, now it's updated and add on. This is SRE 2400, that is engagements to review historical financial statements. SRE 2410, review of interim financial information performed by the independent auditor of the entity. This 2410 is done during the interim period. Okay, so this is for the interim financial information. So both these are performed on historical financial information. Now what about audit? Let's compare this with audit. For audit, the procedure is more. More audit procedures are done to obtain sufficient, appropriate audit evidence. So in terms of quantity and quality, we are obtaining more evidence means what? There are more procedures and therefore the assurance level will be reasonable. And what is common in review and audit? Both are performed on historical financial information that is already occurred. Now let's move on to SAEs. SAEs are also what kind of engagement? They are also assurance engagement. But remember, this is not audit and this is not review and therefore it is not on what? Historical financial information. Not on historical financial information. Okay, don't write these abbreviations on exam that I have written like HFI or FS. Okay, that are you just for studying purpose. Okay, for learning purpose. Okay, this SAE, there are 3 standards and 2 are written in your textbook. For example, I've written the third one, which is SAE 3402. This is other than on historical financial information. Say for example, as we have told, it can be on a prospective financial information or it can be on a pro forma financial information. And also, there is another one, SAE 3402, which is an assurance report on controls at service organization. Remember, all these 3 are not on historical. Okay, that is about to happen or other than historical financial information. It can be on controls as well. Now you will have SRS, that is related service. For related service, are we giving any assurance? No. No assurance. No assurance. And thereby, you have no opinion. Usually on assurance engagement, no, you will be giving opinion in the form of audit report. You express opinion. But this is a non-assurance engagement. And therefore, there is no opinion that is given by you. In the study material, SRS 4400 and 4410 are given as examples. Okay, 4400 is performing agreed upon procedure and 4410 is compilation engagement. This agreed upon procedure means you and the management of the entity, which means the client, will agree on procedure to be done on one financial data. Say for example, it can be on trade receivables. Okay. This is just one element in financial statement, right? And you're just performing procedure on this trade receivable only. So that is one related service. This compilation engagement means what? You are assisting the management in preparing FS. This entity may be having subsidiaries, associate. You will compile all these for the group financial statement. For example, a company PQR. They are having different subsidiaries, A Limited, B Limited, C Limited and so on. So this management is asking help of you as a practitioner, okay, to help in preparation of FS. Okay, so group FS is to be prepared by you. So you're helping the management in preparation or compilation of these financial statements. Now, the big question is, can you audit? Can you audit? Can you audit this company PQR? No. We are preparing FS. And if we are helping them in preparation of FS and we are reviewing, it's just like you correcting here on paper. So assurance is lost and thereby you will be biased, right? So to avoid that, it is always suggested and it will be in violation if you are doing both compilation and audit. So for the entity PQR company, either you help in FS compilation, which means related service, or then you can't audit. Okay, if you're doing that, you can't audit. Now, if you are doing audit of it, then don't be there in preparation of FS because the objectivity will be lost and there will be biased opinion, right? To avoid that, you have to remember this in mind. So if an entity is reaching out to you, they may be giving huge fees and they may be asking you to do both, but say no because you can't do both. There is a case study in your study material, case study 2. Let's discuss because I think now you can handle this case study. Me and You Private Limited has been newly incorporated. The plant of the company has recently started production with the help of funds provided by a bank for purchase and installation of machinery. Further, the company is also utilizing working capital credit facilities from the same bank for meeting its day-to-day working capital requirements like for purchase of raw materials, labor payment, etc. However, just within 6 months of its operations, the management feels that working capital funds are inadequate and the situation is creating liquidity issues in the company. So the company is actually facing liquidity issues. And also there is a bank who has provided them with funds for the purchase of machinery as well as the same bank they are providing with working capital requirements. Now, the management of the company has approached its bankers and requested for enhancement in working capital credit facilities. So, the management of the company needs more funds because they are facing liquidity issues. Okay, now what? The bank manager is insisting upon financial statements of the company for half year along with report providing assurance in this respect duly signed by chartered accountant as auditors far away. Okay, because audit will only happen after the year end. Okay, other than interim audit, but in this case, the audit is really far away. So what the bank manager need from the company? They wanted FS, right? Yeah. For the half year, they wanted FS. Now, it also requires projected financial statements for coming years also, with a report from CA providing assurance regarding these projections to consider request of management. So projected FS is also required. Not only the half year FS, but projected FS is also required from CA. Okay, that is the requirement from the bank manager. The management approaches CAP, who has qualified recently and started practicing. Reports providing assurance for half-yearly results and projected FS are sought from CAP. Okay, which means, are the FS prepared? Okay, let's go further. The management provides necessary information and record to him in this regard. Okay, information is given to him and records is given to him. Have they told that completed FS is given? No. Now, assume in the above case, the company only provides trial balance and FS in draft or preliminary form along with accompanying records for the relevant half year to CAP, which means management has not prepared the FS in full, right? So the management needs your assistance and request him to provide duly signed financial statement with a report for mutually agreed professional fees. Let me ask you a question. Okay, if this is an assurance engagement, can you identify who is the responsible party, who is the intended user, and who is the practitioner? Okay, just take a minute, think. Here you can't find a responsible party. Who are supposed to do that? Me and You Private Limited. But in this case, they are assisting practitioner. to prepare. So this is not an assurance engagement. First of all, keep in mind that this is not an assurance engagement. Even if they ask you to provide assurance, can you give assurance? No, because they are approaching you to prepare FS. So what kind of engagement is this? Now let's answer the question. First one. The management of the company has engaged CAP to issue a duly signed report for half year as referred in last para of case study. Which of the following standards, if any, issued by ICAI are relevant for CAP? Okay. Is this a review engagement? No. Are they providing any interim FS and asking you to review? No. Now, is it an audit engagement? No, this is not audit. Now, what about related service? Yes, this is a related service engagement. In related service engagement, is there any assurance provided? No, right? Then what is the last option? There are no standards for issuing report in such a situation. Is that the case? No. ICA has issued the standards on related services. So it is option C. Now let's move on to next question. Which of the following statements is most appropriate in given case situation? CAP can assist management in preparation of FS of the company. However, issue of a report in such a case is outside the scope of work. Is there such thing? No. Then CAP can assist management in preparation of FS and he can issue an audit report. This is of course not the correct answer because we know, right? Both can't be done by the same auditor. Now let's go to the next option. CAP can assist management preparation of FS of the company and he can issue a compilation report in this respect. This is right. Do you remember the standard that I told? Compilation. Do you remember? SRS 4410 compilation engagement. Yeah. So in that, preparation is done and then a compilation report can be issued by CAP. What's the fourth option? The responsibility of preparation of FS of companies management. CAP cannot assist management in preparation of FS of company. However, it can issue a review report. No, this is not the right answer. What is the right answer? C is the right answer. Now let's move on to the third question. In the above scenario for issuance of signed FS for half year by CAP as discussed in last para of case study, identify the most appropriate statement. So what is the most appropriate statement is the question. SQC is not applicable as CAP cannot issue audit report. SQC is not applicable as CAP cannot issue review report. SQC is applicable in such type of engagement. SQC is not applicable as CAP is barred from issuing any report in such type of engagement. Remember, whatever be the engagement, SQC applies because SQC applies at the firm level. So it applies to every engagement, right? We can't say SQC is exception. It is applicable to every engagement that an auditor takes place. So here, what is the answer? Standard on quality control is applicable in such type of engagement. So the answer is C. Now the fourth question. The banker of company has also requested for projected FS for coming years along with a report from CA regarding these projections to consider request of management. Which of the following standards issued by ICAI are relevant for CAP in such a situation? Okay, what is the question emphasizing on? Projected FS, right? Projected FS is a kind of what kind of engagement? It is not historical. We are going to project it, right? Take a minute and think. For prospective FS or pro forma FS, what is the type of standard that you have to rely upon? It is standards on assurance engagement. Okay. So what is the option? D. Now the fifth question. CAP also accepts work of issuing projected FS with a report to be signed by him. The management has projected turnover of 100 crore for the next year, 150 crore and 200 crore for the following years respectively, as compared to the present turnover of 25 crore in current half year. So half year their turnover is 25 crore. Now identify the most appropriate statement. Now just we have told that this is an assurance engagement if it is pertaining to projected FS. Okay. So in case of projection, can an auditor give arithmetical accuracy, reasonableness? I mean, whether the exact amount is going to happen. Can an auditor give confidence in that? No. Okay. This is actually a little bit outer scope of your syllabus because in final level you will be dealing with SAE in detail. Okay, in detail, what they are emphasizing is that the auditor, while dealing with assurance engagement, say in this case, they are dealing with a projected FS, right? The auditor is not expected to perform the arithmetical accuracy of the information provided by management. Rather, the auditor is going to evaluate the assumption. Okay, management is assuming, okay, these are the working capital that we'll get, and when we are going to uh, work or perform, then this will be the targeted sales. This is going to be our turnover. This is going to be our profit. So those are the estimate or projections, right? The auditor can't say it is 100% correct, but the auditor can evaluate whether the assumption taken by management is right. So reasonableness is only being performed by the auditor. Now go through the example. I mean the options. First one is CAP has to satisfy himself regarding arithmetical accuracy of projected data. No, he can't do. Who can do that? Because the event is going to happen only. Like projection is going to happen in the foreseeable future. We can't say that it is going to be 100% correct. So arithmetical accuracy cannot be said by the auditor. Now, what is the second option? CAP has to satisfy himself regarding reasonableness of assumptions underlying projected turnover and its consistency with actuals. What is the actual? That is the present turnover 25 crore. Okay, that is right. And how much it is consistent, right? Yeah, reasonable as assumption. That is also right. But let's keep this option for the time being. Let's go to the next option. CAP has to satisfy himself regarding arithmetical accuracy of data along with its proper presentation to banker. No, no, no. This is not the answer. CAP has to satisfy himself regarding reasonableness of assumptions underlying projected turnover, its consistency with actuals, disclosure and presentation. Yeah, this is the right answer. Disclosure and presentation is also required to be satisfied by CAP.